Morning, what's up, folks? JT here with another Chart Talk Live. Sorry, I'm a little tiny bit behind schedule. I just was having trouble getting all of my ducks in a row, but that happens sometimes. You get caught in a scramble. All right, the one thing I was hoping to get done that I didn't do is get all of our existing trade plans up so we can talk about those. We have hymns from last Tuesday, NVIDIA. Excuse me. Oh, let me get my screen sharing started over in the Discord, of course. There we go. Coin. Yeah, we did just do coin. Look at that bounce off PT3. It's almost like we know what we're doing with these trade plans. All right, I'll catch up on the other ones as we get to them. So let's kind of talk through things here. Obviously, if you've been paying any attention, well, it's not like we've had an inactive 24 hours since all of this war with Iran stuff started kicking off. But yesterday was particularly interesting with the White House essentially saying, we're going to pause any kind of crazy bombing or anything that we're doing that's just over the line. And we're going to, Iran wants to make a deal, blah, blah, blah. We've heard that story with the tariffs, which, never really wound up being true until something happened totally behind the scenes. So anything that was being kind of announced or touted when that was happening was obviously extremely premature. And so we're seeing that exact same kind of scenario here with this Iran conflict. So no real surprises there, kind of par for the course for the current White House, which is, just say whatever makes us look good or settles the markets or makes them move to the upside, what have you. So anyway, long story short, let's kind of talk about a couple of things though, because I think this is a worthwhile discussion to kind of just go through real quick. I don't think, at least not that I recall, that we've ever really totally gone through this live and during one of our streams here. So I'm going to talk a little bit about kind of what my kind of thought process was and what I was looking at. To me, that said, we should probably be looking to play for downside, and I think we're going to see some new lows before we see new highs. I've been saying that for a while now. I posted a pretty detailed analysis on what I was seeing with the markets back in February, a little over a month ago. And so anyway, let's just kind of talk through that real quick, kind of give a quick status update on where everything's at with that analysis from them. So let's do this. I was working on a couple of things there. That's why that looked so noisy. All right, so how do I want to do this? Let's start off with the weekly chart. Because again, I think this is important. And also good, technical analysis that anybody can pick up and start to leverage to make a little bit more sense out of how to navigate some of these trickier, more volatile market conditions. It doesn't necessarily make it easier, but it will put you, I think, overall in a better position. So we had this weekly trend that was pushing things up. That went back to kind of shortly after the whole liquidation day thing, where we first got into some really, really ludicrous potential tariff numbers that were being thrown out by the White House. But after that, the market did find a trend that it rode to the upside and rode pretty nicely, taking us all the way up to, of course, current all-time highs. We did have one kind of a scary week where it looked like, okay, like we're almost definitely going to close below this trend for the first time in a long time. That wound up not being the case. Friday wound up being a massive pump day that just sort of pulled us right back above. So we had 4 days kind of heading to the downside, and one day that was sort of the came down to the wire. The bulls saved it at the last minute, got us back up above that trend line. But then the very next week, we got our first close below that trend line. That's when you start looking for stuff like this, where we start to back test up in that range, and we continue to back test up in that range. When you start to see that, it's extremely clear that we have lost that trend at that point, even on this much higher time frame, looking at this weekly chart. And from there, the signal was short the rips, right? And that's been the case ever since. Every rip, every pop has been shorted and continues to push lower and at a fairly rapid pace. Pretty strong trend pushing to the downside as well. So, okay, that's great. But where do we start to look for, potential support? Where do we see, a place where in the bigger picture, the markets might actually bounce? So one thing that's a worthwhile effort, run a fib retracement from the start of the trend to the current all-time high. See where that kind of sets up your potential retracement levels. Obviously, I've got my own support and resistance levels. We did have, and it's been invalidated, but we did have a demand zone that the market was trying to hold down in this range. That gave way. My target ultimately was this nice confluence right here where I had an established weekly support and resistance level there at 65, 29, 25. That also wound up overlapping with that fib retracement. So that level was there first. Then I drew the fib retracement. That fib retracement essentially landed right on that level. As you can see, we got down to that level after a 4-week sell-off. That was the first time that I think we really saw an attempt to bounce. We did dip a little bit lower, then we obviously got that little bit of a, I guess I'll call it a catalyst, whether it was accurate, true, etc. or not really what we're here to weigh in on. But ultimately, dipped a little bit lower, caught that next support, that weekly demand zone right here down at 64.83. So a little bit below the target, but I mean, I'd say that's a reasonable margin of error considering everything we're kind of currently wrestling with that's influencing the market price action. So that brought us all the way down again into that first, for me, buy level and retracement level. Again, we did dip a little bit lower, but have bounced off that so far. But where did that bounce take us? It took us right back up to the trend line, which we promptly rejected and pushed us back down. So things still overall looking pretty bearish for the markets. I would certainly say the next real key level, if this low doesn't hold right here for me, would probably be down here to 64.08. That puts us at the bottom of this weekly demand zone. There's also a weekly support and resistance level right there, very close to the 61.8 retracement as well. So this would kind of be my next potential bounce target, somewhere in that range. And then, if for some reason that doesn't hold, I'd definitely be looking at this weekly support, weekly demand, 78.6 retracement. So those are kind of my downside targets as we look for things to potentially continue in this direction. Again, the trend is your friend. As long as we're below this trend and pushing to the downside, I'm going to be, looking for opportunities to short pops personally. That's just my approach. Are there going to be some really good buy the dip, load up on shares that are, probably at a price we may not see for a while still, or for a while before, if we ever see those numbers again? I'd say we'll see some of those opportunities, because this is very much driven by, what I believe will be a short-term catalyst. When I say short-term, months versus, a year plus, at least that's my hope. And once that, starts to have clear signs and confirmed signs, that's the other key part. Obviously, again, we've seen some very suspicious, manipulative tweets, etc., kind of coming out of the White House. But I think ultimately, once the market sees that there's a real end in sight, it's going to start to reverse some of these down weeks pretty quickly, and it's going to try to make a run back to the upside. So anyway, again, keep your heads on a swivel. For me, from just a pure technical analysis standpoint, that's really the best tool that we have, given all of the back and forth and misleading information that's coming out from one direction or the other. You know, I'm going to continue to focus on downside and just leverage these charts. Focus on your technicals. The technicals will hold up, and then the catalysts should help facilitate moves in your favor if you're kind of setting yourself up for success about what your plan is and being patient about finding those right entries. So anyway, that's kind of my quick market breakdown. Not so quick market breakdown. I spent a good chunk of time on that, I'm just now realizing. But anyway, I think worthwhile discussion, and hopefully that you know, puts some folks at ease with regards to what's happening from a technical analysis standpoint, and again, spend more time focusing on this versus spending a lot of time trying to anticipate when that magical tweet or when that catalyst is going to hit the news wires that says, all right, looks like we're on the off ramp now for sure, and we're heading in the right direction with regards to this conflict in Iran. So any good long-term recommendations? Yeah, I mean, I've said this a number of times, and I continue to say this. I think, you know, for myself personally, I think Microsoft is probably one of the kind of best opportunities right now in the market. It's a little bit expensive per share. I also like Nvidia at some of these levels. I think once Nvidia gets moving again, it's going to see new all-time highs. I think Microsoft will retest all-time highs before we know it. And just my personal experience of what I'm seeing a lot of organizations do that with, you know, that have other folks in the IT space that I talk with on a regular basis. We're going to see a lot more businesses starting to leverage Copilot, in my opinion, because there's better guardrails there. A lot of businesses are already in the Microsoft ecosystem, so Microsoft is just now starting to monetize that. I think the concern for Microsoft has been their heavy CapEx spend, but that's really kind of front-end investment and a long-term gain, in my opinion. So, you know, that's one of the names that I personally like the most. Well, yeah, they're going to force it down your throat, of course. I mean, they've got you in the ecosystem. They run, you know, just about every business network in the United States, and I'm sure probably pretty heavily outside the United States. So, yeah, Microsoft, I think, has some huge upside potential. They just launched a new licensing package that includes agentic AI, but that licensing package is a significant bump up to what the current monthly licensing is for you know, just your Microsoft 365 enterprise plans. So I mean, it's like a 50% plus increase if you spread that out across, you know, all users in an organization. So I think Microsoft is starting to find ways to monetize that. The other thing I like about Microsoft and what their potential is with Copilot is they're kind of model agnostic. So with Copilot, you can run either Anthropic models, or you can run OpenAI models. So, you know, there's a lot of benefits, I think, that Microsoft is building into their ecosystem that's going to allow them to start to really monetize agentic AI, which is rapidly growing. I mean, I've got several automations. That's really kind of where I've been, and where I've been spending a lot of my extra time is just, you know, learning that stuff, and building out my own automations. For example, I now have an AI agent that schedules these live streams on YouTube for me. So anyway, that's kind of one of my top picks, especially given its current price per share. All right, so let's keep this rig rolling. Let's get through some trade plan recaps. I've got USO on watch always because obvious reasons. All right, so HIMS was 3. Okay, yeah. So HIMS we did last Tuesday. Did give us a confirmed break here last Friday, broke below, back tested the 200 SMA. That took it down to PT1 pre-market. Unfortunately, that was so early pre-market that we were testing that support. And then, of course, that catalyst came in right at support. Again, you guys hear me say this all the time. Charts will precede the news. You'll be able to kind of maybe telegraph some of these moves if you're looking at things the right way. Caught that PT1 support pre-market, pushed it back up to the put entry, but it's really struggled once it's gotten up near that 2254 level, and looks to be rejecting again. So we may see HIMS make a pullback, and in this case, with it now below the 200 SMA, that pullback could potentially take it all the way down to PT2, where we have a nice confluence with the 333 SMA. Could see a bounce there at 2014, so keep that in mind with regards to HIMS. NVIDIA, let's get this locked in. Oh, I got all my levels on this chart. Sorry. Let me... Oh boy. I need to clean up this object tree. That looks better. NVIDIA has given us all of our downside targets and then some. In fact, yesterday that pump took us right back to PT3, our final downside target from that plan. It rejected that level and it's pushing down again. So NVIDIA may push a little bit lower before we see a really good buy the dip opportunity on it. But I think long-term, big picture, NVIDIA is doing some really, really impressive stuff. And I think that they've got a pretty good moat around them with their architecture for their GPUs and how those are becoming really kind of the gold standard when it comes to building out AI resources. Coin, another one that we had planned for downside. We did this one last Tuesday, gave us a confirmed break below, gave us PT1. It's kind of really fought hard in this put entry, put stop loss average down range. Lots of sweeps trying to get things moving to the upside, but those keep getting rejected. It did pull all the way down to PT3 there yesterday morning, but immediately bounced again along with that, with the rest of the market. So coin making our plan look amazing with that downside target. Again, unfortunately, it hit, and there was that catalyst that caused things to react very aggressively at PT3. You know, them's just the breaks when it comes to options sometimes, and that's why I want to make sure that we always have plenty of time on these trades, because you just never know at what point in the day are the moves going to play out, and is that going to get you, you know, in a trade that should have been extremely profitable that turns out to be much less profitable because of that big pre-market move. Again, given the volatility in the markets, not surprised that we're seeing that kind of stuff taking place every now and then. All right, we've got some more trade plans to recap here from last Thursday. We did Amazon. Amazon, again, kind of very similar scenario, gave us the confirmed break, gave us PT1 plus, but then that catalyst yesterday, along with the rest of the market, pushed Amazon quite strongly to the upside. It's coming down to an interesting confluence here at 208.39 with this bullish momentum trying to hold up. So keep that in mind. Over or below 208.39, I should say, we could see Amazon start to make another pullback and head back toward our put entry, and potentially give an opportunity to catch us on the downside that hopefully could be capitalized on and doesn't result in some kind of result in some kind of a reversal during the extended trading hour session. Applied Materials, we also did last Thursday. This one ran up to PT3 with that market pump yesterday. There was opportunity to take profits on this if you happen to have been in on that close above there at the end of the day Friday. I know that's a tough one to catch, and I certainly wouldn't have expected most people to shoot their shot on that one given the current market conditions and the prospects of having to swing over a weekend. Now it's back to the call entry though, so keep an eye on this one. If we start to see signs of a bounce and it can push back over this 200 SMA on the 2-hour chart, Applied Materials could make another push to the upside here. We just did AMAT. Oh, we did Amazon AMAT. Do we have another one? Poet. Yeah, that was from last Thursday. We also did Poet. Poet's been generally flat, caught a little bit of a bounce there Friday off the put entry. No confirmed breaks below there. Then it started to look like it was going to break down, but of course that discussions about trying to off-ramp with this whole Iran thing got everything moving to the upside. So hasn't seen a good confirmed break yet during trading hours below that 583 level. Below that, keep it on watch for potential downside. Just remember at $5 and some change, downside is technically quite limited there. All right, so let's get to some of these new ticker requests that we saw come in the chats this morning. Panicking, what's up, my friend? CVX, sure, let's take a look at CVX. And yes, I will let you know when Sell the Rips is over, LB. Of course, I'll let everybody know. All right, or at least in my opinion, I could be, I'm just as capable of being wrong as anybody. All right, so CVX, and what is CVX? I know this name. Oh, Chevron. Obviously moving up strongly with oil prices, all-time highs for Chevron. So this is going to be an interesting one. Let's see if we can't nail it down. All right, first things first, need to get some levels on the chart. Yeah, I was going to say, I don't think I've ever really spent a lot of time analyzing Chevron, so that's a good thing. So let's get this plan moving. I don't know why I had that 169.23 level there. It was catching some wicks though, but since I don't really know why I had it there or remember why I had it there, I'm not going to leave it until I've had a chance to look at this chart some more, and if we find that level again, well then I guess it was meant to be. Yeah. Yeah, that's not a lot back there. So this is going to be, it's going to be a tough one because we haven't really found this top yet, and it looks to be trying to break that recent top, last week's high here, pre-market. In fact, it is kind of a little bit over. Let's see. Yeah, let's get down to some of these higher time frames. I think there is, that's probably trying to catch it a little too early. There's definitely a trend here somewhere. That's interesting. Okay. Sorry, I'm just trying to get my bearings on this chart. The question is, do we really have a good opportunity to notch out some trend-based fib extensions? Yeah, let's... This will be interesting to see if and how this lines up. Should put us right about there. Which would give us these levels, and we are testing the level here pre-market. That's the 50% extension. All right, that gives us those upside potential targets. Again, we are using fibs to essentially anticipate where we're going to find resistance that we've never tested before. All right, well, let's take a shot at it. I mean, we don't really have much else to work with as far as this upside goes. So let's use our extension targets there. You can also use part of that fib set with this confluence right here as a stop loss average down for that upside trade plan. Yeah, downside, if we break back below 195.74, I think we're going to be pretty firmly below the trend there. Check this on the hourly time frames here so we can try to nail these levels down a little bit better. 188.01, a little bit above that base of those extensions, but I think there's a good flip of support and resistance there. We saw it on the weekly chart. I think that would be a good level to watch as a price target below that. $182.48. Below that, 177.36. All right, let's check what our indicators have to show us, see if we've got any confluences. We sure do. Bottom of that bullish flag is going to wind up very close to that put entry level, so below that definitely could open up room to the downside. SMAs are just below and trending up pretty nicely, so keep that in mind, at least here on this 2-hour chart. But yeah, I'm not seeing anything that's strongly changing my mind about where these levels should be, and obviously there's nothing to really help us to the upside, so that just is what it is. All right, so let's lock this in. All right, So we're looking for that breakover too. 644. 27, 218.06 and 226.66. Stop loss average down 201. Whoops. 201.76. Shared stop loss there. Oh, come on, buddy. What are you hitting? 201's. Gosh dang it, man. My number key fingers just don't want to work this morning. All right. That all looks good. It is a shared stop loss average down. There we go. All right. Don't need those or those. Make our chart nice and clean. Let's take this over to the hourly. Yeah, again, still showing good support confluences down near that 195.60, so certainly below that. Again, continue to believe that that will lead to a pullback in Chevron below that level. All right, let's get this posted to the chats. Here is your CVX live stream plan. And of course, let me get this over the elite chat real quick. So we can set our alerts. We'll take this to next Monday. Cool. All right, so that's locked in. Last but not least, before I forget. All right, so what are we looking for here on CVX? We're looking for a break over 206.44. That should bring targets at 211.27, 218.06, and 226.66 with a stop loss average down at 201.67. To the downside, we're looking for a break below 195.60. That should bring targets at 188.01, 182.48, and 177.76 with a shared stop loss average down with that upside trade plan at 201.67. Those are your CVX live stream plans. Very happy to help, brother. I appreciate you asking. All right, what did we have next? CVX. Okay, yeah, let's take a look at Microsoft. All right, Microsoft. Well, it did lose as of yesterday, that daily demand zone. Bottom near that 377.25 weekly support, new low of the year for Microsoft there. I also think, yeah, this daily level's off just a little bit. Looking at it on these smaller time frames. But I think that could make for a good stop loss average down, giving that pre-market Monday low as a downside entry level. Question is, Turn this off for just a sec. I just want to see levels for a minute here. Yeah, there is a level hanging out right there. And potentially down into this next demand zone. This 360.10. We did build a nice bounce off of that. All right. So that's downside plan. Where's the upside? I'm just checking for any downtrends or anything like that. I mean, there is one overhead here. Hmm. I'm just trying to figure out if there's enough reward opportunity with an earlier entry somewhere below that trend line. It'd be very risky though. Markets are risky enough as it is. There is a level sitting right here. Hmm. All right, let's be patient on this one. $391, $394. Make that slight adjustment there. I think that looks good as a first price target. Now, what I will say before I put this PT3 in place is I think if there's going to be continuation beyond PT2, it also needs to break through 406.82, so keep that in mind. But if we can get through both of those levels, I think that gives us a good target there at 411. So a wide range here on Microsoft, but I think that yeah, I mean, that's just where I think the opportunity starts to actually look good for the upside. We're close to this downside scenario potentially opening up and playing out. So Let's lock this in. 0.38 and 1104. And 381.66. Cool. That looks good. All right. Let's clean this up real quick. That's pretty good. All right. Let's. Oh, gosh. I almost went one step too far. Make sure we don't. Well, yeah, we do have some confluences there. Also, those SMAs right on top of that downtrend. So definitely want to make sure that guy's out of the way. But given where we're currently at, if and when we get a break over 394.85 before we likely revisit and replan Microsoft, I think over 394.85 should more than likely also result in a break above that trend, and also likely a break above the SMAs there as well here on the hourly chart. So giving us some extra information there with NTS. Okay. So let's lock it in. Here comes your Microsoft live stream plan. And let's do the elite. Oops, there we go. All right, that's good to go. So let's set our alerts. There we go. Oh no, I want trade plan. Yep. So those will send alerts to the chat. All right, that's good. Last but not least, let's save our template. All right, so what are we looking for here on Microsoft? We're looking for it to break below 377.25. That could open up some downside opportunity with targets at 372.19, 367.05, and 360.10, with a stop loss average down at 381.66. To the upside, we're waiting for it to break above 394.85. Call it 395 if you want. That should bring targets at 438, 405.27, and 411.04, with a stop loss average down at 391.01. All right, that puts us about 15 minutes out from market open. If I start on any more trade plans, it's going to run us a little too close to market open and won't give me time to get the SPY plan put together. So I think this is a good stopping point. Do I look at RSI? Not a lot, if I'm being perfectly honest. It's a decent thing to keep on watch, but in bearish markets, RSI can show oversold, it can stay oversold. Same thing with bullish markets, RSI can look overbought and continue to get bought up higher. So it's a little bit tricky, but you know, if you're catching like a major support, some confluence, and RSI is just so beat down it almost needs like a reset bounce just for the RSI alone, that can be a little bit helpful, but I certainly wouldn't use it as kind of like a major factor. It would kind of be an ancillary piece of data that could be helpful to a plan that's more focused on the charts. So that's my take on RSI. All right, we will be back Thursday morning at 8:30 a.m. Eastern Standard Time. I do want to thank everybody for joining me this morning. I am going to go get to work on this SPY plan now. So as we always say, I mean, I don't sleep enough as it is. If I had to get up that early, I'd probably start to crack mentally a little bit. 'Cause I'm typically up till 1 or 2 o'clock in the morning, just working my ass off. With that being said, I want to thank you all so much for joining me, as we always say here on Chart Talk Live. Plan your trades and trade your plans. Remember to keep those wins big, keep your losses small. Go out there, get some green. Have a fantastic day. I will see you all in the chats, and I will see you back here Thursday morning at 8:30 a.m. Until then, keep your heads on a swivel. Stay green out there. Have a great one.